think every day we are happier and happier that we took the vote against the bailout, the big $700 billion TARP bailout. I think every day we feel like we were proved a little bit more right every day. But unfortunately, this bill would give permanent bailout authority to the President of the United States. And what's unique about this bill is that the bill bypasses Congress. No longer would the President have the messy obligation to come and ask members of Congress, what do we think about bailouts? The President on his own could issue any bailout at any time in any amount. Again, to give the executive the authority of the purse, that's contrary to the Constitution. The Constitution gives the authority to the people's representatives. We were elected for a 2-year term. There's a reason why the founders wanted the House of Representatives elected for 2-year terms, because we control the money, and the people need to be able to vote us out of office if we're spending too much money. So we want people to have that opportunity to go to the ballot box and vote us out. If you're the president have the power of the purse, which the Constitution does not give that authority to the president, then he can go ahead and spend money, and it takes 4 years for the people to make that change.
Yeah, no, that's a great point, and I think I'd like to expand on it a little bit. I mean, for example, we're talking about the fact that your average American, they're going to be on the hook for a lot of this. And when you look back to the so-called troubled assets relief program,
they're on the hook for all of it. Their government has no money. It's only the people's money. So we're on the hook for all of it.
The People's Republic of China's money.
That's right. That's right.
Now, when the Department of Treasury came to Congress to get the so-called troubled assets relief program, they came with a 3-page bill. Congress had its say and actually drafted up legislation. And then we saw what happened. The Department of Treasury then went off and didn't buy any troubled assets. They went and did what they wanted to do and just infused money into the banks.
Isn't that funny how those blank checks work that way?
And that's exactly what we're talking about now. Why would we trust the federal government with this authority without having to go to Congress before they try and bail out banks?
Well, exactly. That's why every piece of legislation that Congress passes should have a sunset clause, so that there is an expected date of expiration. We don't have this with this new bailout that's coming forth. And that's why I think people overwhelmingly, when they hear that this is a continuous bailout bill, people say, been there, done that, no thanks, we don't want this bill. But of course, the way that the administration has been relaying this bill is that it's somehow a bill to kind of tie Wall Street up in knots. People are for that. But when they find out that Wall Street wants this bill, that the head of Goldman Sachs wants us to pass this financial reform bill, that's kind of all we need to know. Because again, this $700 billion bailout isn't the first time that Congress did a bailout. All through the Clinton era, there was bailout of Wall Street friends after bailout of Wall Street friends. And that's when Wall Street learned that they could just throw the dice and take the profits themselves, but then put the losses on the backs of taxpayers. That's, again, what this bill would do. And, again, it's why we reject this bill out of hand.
And there's another component of this, too, and that is that the bigger the company, the bigger the entity is, the more powerful they are politically, and the more willing they are to accept regulation, because the regulation suppresses the competing companies that are smaller than they are, that have less political advantage. So when you see Goldman there, they're big, and they're politically influential, and they're happy enough to take some regulations because it keeps their competition out of their marketplace.
And think how weird this is. Here you have businesses wanting to get on government's list of too big to fail, because if they make it on that list of too big to fail, they get 3 big prizes. One is they get perpetual bailouts. The other is they get a perpetual line of credit from the federal government. And third, they get the federal government to secure their debt. So it's kind of like if you take your high school student, send them off to college, and you tell your high schooler who had a little trouble handling money at home, oh, by the way, dear, when you go to college, I just want you to know if you get in trouble, I'm going to be there to bail you out. And guess what? If you decide that you need more money, I'll be there with your perpetual line of credit. And if you want to go buy a car, don't worry, I'll sign on the dotted line for you. You wouldn't do that for your college student. Why would we do that for private businesses in the United States? And let's remember really what this is. This has a lot in common with Italy in the 1930s and the way Italy dealt with economics. It is still continues private ownership of business, but it's government control. So government control of the private business while it's private ownership. That's still, at the end of the day, the federal government virtually having the say over private business. We lose freedom, we lose economic competitiveness, and don't forget, Italy is in tough shape now financially, and that's not where we want the United States.
Now, another issue in small business is the issue that businesses are going to have to issue 1099s for doing more than $600 worth of transactions in 1 year. That would devastate small business, and if you could talk a little bit about that, too.
Well, the small businesses, you have to be jack of all trades and master of many.
Yeah.
And so, I mean, for me, I know that I needed to go out and produce a product and a service that had some value. Then I had to do all the things to support that, like do the accounting, meet all the regulations. If you add on to these businesses that they have to track anything that's $600 or more, any transaction that's $600 or more, they'll have to go to that business and get their employee ID number. They'll have to file the form. They'll be faced with a fine if they don't. They'll have to hire more accounting to get this done. It's bad enough under these circumstances that we have now. But to add all of those layers, especially to small business, it will add an extra cost. That will, again, it will suppress businesses. There will be businesses that will not start up because they're faced with regulation that they don't know how to handle. Other businesses won't be able to handle the load. They'll throw their hands up and decide to go to work for somebody else, and this human spirit gets squashed down and crushed. But also, I look at this, the paper trail that it sets up for these transactions, so the federal government can then electronically trace these layers of transactions down through every value-added transaction going up through the chain will already be part of the federal government's records. Now, when I said value-added transaction, that's a VAT, isn't it? It lays the groundwork for a value-added tax. It sets up the paperwork chain that's necessary if you're going to have a value-added tax. And I think that's the insidious part of this that is completely oppressive. It's European, and we should all be scared to death that looks like they're laying the groundwork for a value-added tax.
And remember, one thing that the government loves to do is they love to turn businesses into deputized IRS agents. So the private businesses have to take on the entire burden, like Congressman King said, of all of the paperwork. But there's really no benefit that the private business gets out of this. They have all the pain, and if they get it wrong, they have huge fines that will be levied on them from the IRS. I used to be a federal tax litigation attorney, and I saw from the inside the overreach of the Internal Revenue Service. And let's remember, the reason why government is doing this is not to benefit the little guy or the private sector. The federal government is doing this because they're so greedy for revenues. They're looking anywhere they can to bring more money in. Why? Because they got a spending problem. They are shopaholics, these bureaucrats. And that's all they want to do is spend, 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 spend. And so they're turning all of us inside out and upside down and forcing us, trying to get all the coins out of our pockets because they're looking for change in the carpets and under the cushions right now because we're in trouble financially because they cannot stop themselves from spending money that they don't have.
Now, a value-added tax is a tax at every stage of production. Yeah. It's a sneaky tax because people don't see it.
It's kind of like a national sales tax. That's the closest analogy. And the problem is where the value-added tax has been employed, primarily in Europe and in socialist countries, is added about a 20 to 25% tax. So if you go through the drive-in and you're getting a value meal off the dollar menu, rather than paying $1 for those French fries, you're going to pay $1.25. Or what's worse, if you go to the store and you buy a bar of soap and you were expecting to pay $1, now it's $1.25. And so the federal government, and again, you won't have the tax show up on your sales receipt because it's hidden. And so anytime the federal government needs revenue, all they do is dial up the rate of the value-added tax. It's hidden, nobody knows about it, and it produces a boatload of money for the federal government. This is a really bad tax because at the end of the day, it just means less money for us and our constituents, more money for the federal government. Hey, great for them, bad for us.
There's a part about the layers of this too that I think people need to understand. It makes a tax auditor out of every transaction, every business that's doing business. So if you're going to produce a loaf of bread and you go back to the wheat from the farm, and let's just say that farmer sells $1,000 worth of wheat, and the value-added tax on it is, let's just pick 10% because that's easy, but it's more likely to be 25, and so there's 10% on there. So he has to pay the $100 tax